On that May 2023, as Acorn I-REIT investors received an email from VUKA, and VUKA is the platform you need in order to access the Acorn I-REIT market. We received an email that told us that our final dividend for the year have arrived. And so we logged in to see the dividends that we had, and most of us were quite shocked, either by how much they were or how little they were. And from that day, I started receiving numerous questions from the Wealth Tribe about how, especially questions to do with how those dividends were calculated. And today I have an opportunity of speaking to the CEO and the founder of the Acorn Holdings Limited to help us first learn about the real estate market in Kenya, how the Acorn I-REIT is structured, how they calculated the dividends, and many more about real estate investment trust in Kenya. Thank you so much, Mr. Edward Kirathe, for joining us. And I'll give you an opportunity to introduce yourself.
Okay, thank you very much, Agatha. I'm very delighted to meet the Wealth Tribe.
Yes.
As I have seen one or two of your videos and postings, and I really admire the stuff that you're doing for young Kenyans and retail investors. Yeah, so I'm Edward Kirathe. I'm the founder and the group CEO of Acorn Holdings Limited, which is the company that is behind the Acorn Student Accommodation I-REIT and I-REIT, and also the VUKA platform. And I started this business about 22 years now ago, in October of 2001. We were initially really managing projects for other corporates.
Okay.
Like in those years, we did the Coca-Cola head office, the Equity Center, where the Equity Bank head office is in Upper Hill, the Deloitte head office. We would manage projects for corporate clients. And then after about 5 years, we started getting into real estate development. Around 2006, and we built a number of residential properties, commercial offices, and would build these buildings, get tenants or get buyers and sell them. And we did that all for the next 10 years until 2015, when now we took the decision to focus on providing rental housing for young people, starting with purpose-built student accommodation.
Yes.
And that's what we've been doing for the last 8 years, from the end of 2015. To date. So that's like a brief history of
Acorn.
Our journey.
Okay. From that introduction, I can see that's over 2 decades of experience in the real estate market for yourself. What have you learned about the real estate market in Kenya?
Yeah, so I've actually been in the industry in one form, shape, or the other for 26 years.
Okay.
Because previous to setting up the precursor to Acorn in 2001, I had worked as an architect with one of the leading firms in Kenya for about 5 years. So I've actually been in the sector much longer than Acorn has been in the sector.
Yes.
I think the biggest lesson I've learned about real estate in Kenya is that people don't understand it.
Okay.
And it's a big problem, and it looks simple from the outside because it's not a highly regulated market. In fact, the real estate market itself, it doesn't have a regulator per se.
Yes.
And so I have watched all manner of people, many people who have no knowledge or experience in it come in, burn their fingers, and then say it's bad, but they keep coming back. So I think it's a highly misunderstood market. And, because anyone can wake up and go and do real estate.
That's true.
It's been a very patchy world. I must say, for me that's the biggest lesson. People don't understand it.
And did that inform why you started the Acorn purpose-built student accommodation I-REIT?
Well, we started that because there's a need for student accommodation, not to make people understand per se, but that's why I'm very big in educating the market.
Okay.
both about real estate itself, and then now over the last few years about capital markets.
Yes.
Because the two, as I say, are very poorly understood in Kenya.
Okay. Capital
markets is regulated. So there are people who have done things unregulated, but they are it's easy to tell that they are operating outside regulation. Real estate itself is not regulated. Now, if you look at other major sectors in our economy, banking, insurance, they are regulated.
Those are regulated, yes.
And you can't wake up tomorrow and just start a bank. You won't be allowed to go collect deposits from Kenyans.
That's true.
You can't, there are certain, major requirements that you have to have before you can go there. Real estate, if you can just get approvals from the county government, you can go do anything. So that's why for me I'm quite passionate about educating. I don't get as many opportunities, unfortunately, to talk about it, but I'm quite passionate that people understand what it is, and then you can make an informed decision whether you want to get in or stay out.
Okay. All right. So maybe you can tell us in a brief now. Yes, you have mentioned that you started the Acorn Holdings Limited because there's a need for it, the student accommodation. There's a need. We have a lot of, even when I went to uni, one of the issues we had is that the institution had the capacity to provide the classroom and the lecturer and all that, but they had no capacity to provide beds, a bed or accommodation. And that's why I understand why your product is there in the market. But what else inspired? Why the Acorn student accommodation? Why this product in the market?
Okay, so when you get into investing, any type of investing, including real estate, there is 3 ways you can do it. You can do it speculatively, like most people do.
Yes, with land, for example.
Yes, you can do it opportunistically, and the difference between speculative and opportunistic is this, that when you're doing opportunistic, you understand the sector, and so you're in it. And so when you see an opportunity, you go for it.
Yes.
When there is an opportunity. That's what Acorn did before 2015.
Okay.
We would, for example, know that there was an opportunity to put commercial office space in Lavington, and there was no supply. How did we know that? Because we were in the markets.
Way before.
So we could see the opportunities as they arose. So we did it, but that you can only do when an opportunity arises. Like another example, if you're a stockbroker, you're in the market, so you can know when there's a good opportunity to buy a stock because you're in the market.
That's true.
But you can sit it out. You wait until there's an opportunity, then you invest. That's the second one, opportunistic. The third way to do it is thematically.
Yes.
In thematic investment, you identify an opportunity and a gap in the market that is big. And then you say, I'm going to focus on just this. I'm not going to do anything else. I will just do this. In opportunistic, you can see a gap for offices, you do offices. You see a gap for housing, you do houses.
Housing, yeah.
So those are the 3 ways. Until 2015, we were opportunistic. We were in the market, we were doing a lot of projects. We could tell where the gaps were. And we would just go and do that gap. However, now, when we wanted to do thematic, and now to answer your question about why did we get student housing?
Yes.
We tried to identify where the greatest need of housing in Kenya was going to be for the next 50 years, not the next 5, 10, 15, 50 years.
50, yeah.
And we look to identify that we had to look at macroeconomic data. Okay, and that data tells you where to go. So it told us, for example, that 75% of the population is under 35.
That's true.
So whatever we do, we need to be serving that 75% market, not the one above 35.
Yes.
Then we could see that urbanization, Kenya is one of the fastest urbanizing place in Africa.
Yes.
Nairobi is growing rapidly. So we had to ask ourselves, what will these urban people
Where
need?
will they live? Yes.
We were not even initially talking about living. We were just saying, what will they need?
What will they need?
They'll need schools. They'll need hospitals. They'll need housing. So we said, of this, which theme, where do we want to play? So we said, no, we don't want to do schools. We are not doing hospitals. Let's look at housing.
Okay.
Then, because we could see the population under 35, we said, let's do housing for young people. So the only question now was, what type of housing, rental or for sale? And then we realized that 90% of residents in Nairobi rent. They don't own their own home.
90%.
So we asked ourselves, why do they rent and not own? And we've learned it's two things. One, they are young, and you're not going to convince a 22-year-old to buy, even if they could afford it. But secondly, the income levels are the ones that force most people to rent because it's unaffordable to buy.
That's true.
And finally, the cost of buying mortgages doesn't make sense. That is why people are renting. So then it was very clear that we do rental housing for young people. So if you look at the back of my card, you will see written behind there, rental housing for young people. Then we said young people is anyone from 18 to 35, let's say. Then we saw that market is not homogeneous. At 18-year-old, are young people trying to go to college or university. That's what you find between 18 and 22 predominantly.
Yes.
After you pass 22, you get young professionals. They have just left college,
School, yes.
or university, and they are looking for a job, or they start self-employment. The majority are self-employed.
Yeah, that's true.
And when we use the word professional, we say it is not architects, engineers, and doctors. Even the lady who serves you, or the gentleman who serves you at Java, that's a profession. The barber who cuts your hair.
Yes.
The Uber driver.
Yes.
So we don't say that professional is just people who are working in, even if you're self-employed, running a small SME, you're a professional photographer. That's your profession.
Yes.
So that's the next segment. And then right after that segment are young families, young couples. We call that starter homes. They need starter homes. Now in Kenya, at the time, 8 years ago, nobody was doing student housing. Even to this day, no one is doing young professional housing.
That's true.
No one is doing starter homes.
Yes.
Everybody is doing, a lot of developers build family homes.
Family homes, yes.
Or apartments,
Yes.
3-bedroom, 4-bedroom, whatever. So we said we are going to focus our next couple of decades in doing rental housing for young people, starting with students. And that's how we started the journey. And this is now thematic investing. People come to us, we want to build an office here, we want to do houses for sale. Well, we say, no, we don't do that. We do only our own thematic investment based on the data. And the data is proved it, because like now, if you look at student housing, at that time, there were 550,000 university students in 2015.
Yes.
But there were only 40,000 beds. Everybody else was living in improvised accommodation. If you go to Strathmore University, right behind it is Akiba Estate and Madaraka.
Yes.
Most of Madaraka, those are 3-bedroom apartments, are hostels. But that is not purpose-built for students. It doesn't have amenities.
Yes, they meet their needs.
There's nowhere to study. It's a mess.
Yes.
So clearly there was a big need and a gap for that space. And we could see that the gap would continue for so many years to come, because today, over the next 10 years, 1 million Kenyans will turn 18 every year for the next 10 years. So where are they going?
Yes.
They're going to college, they're going to university. So it's a very big demand.
That's a very good genesis of why you started this Acorn student accommodation, right? One of the things that an investor in Kenya or anywhere in the world thinks about is opportunity cost. So one of the questions somebody submitted is that given REITs and real estate in general are riskier than treasury bonds, when you think of opportunity cost, where should I go? how do you expect to deliver returns that can beat treasury bond yields, with the rental yields in Kenya averaging 5%?
I never intend to beat treasury bonds.
Okay.
And I never will.
Okay.
Not if they continue to be 14%.
Yes.
Maybe if they come down to, during around 2005 to 06, they had come down to 4-5%.
Yes.
But at current levels, debt is very costly in Africa. It's not just a Kenyan problem.
Yes.
Because governments borrow at a very, very high rate. Those rates you're saying,
Yes.
14%.
Yes.
So I'm not telling people, and this is again where I say mis-selling of real estate. You're not going into real estate to compete with government bonds. You're getting in real estate because as an investor, it is important to diversify your portfolio.
That's true.
You can't put all your eggs in one basket.
Yes.
Recently, this last year, Ghana defaulted on its local sovereign bonds.
That's true.
Guys were told, you're getting zero. And then they were told, by the way, you had invested 100,000. It's now 50,000. We are only going to pay you 50,000 because they had to do their debt restructuring. Those things are not risk-free. Now, imagine all your eggs and you're retired are in those Ghanaian government bonds.
Where do you stand?
I'm not saying Kenya is going to default,
Yes.
but defaults are known.
Yes.
The reason people invest in real estate is not to compete with treasuries, money market funds. Those things are important in your portfolio, and we tell you should have them. It is a diversification strategy because real estate carries different return profile and risk profile. For example, unlike unit trust, bonds, and equities, real estate, you're backed by a real asset.
That's true.
There is an asset behind there. You don't wake up, if you are a shareholder of Uchumi, and one day find it's a paper certificate you hold. There's no value.
Yes.
In real estate, even if Acorn went bust tomorrow, the property is there. Investors, through the CMA, can still take over the properties. It's an asset-backed investment. And it is important for your diversified portfolio not to compete, because putting your eggs in one basket, I am sure Wealth Tribe, the name suggests the guys want to be wealthy.
That's true.
Show me a single wealthy person
Who has one
who has all
asset.
the money in just
Treasury
one
bonds.
asset.
Yeah, one asset.
Look at pension funds.
Yes.
Why, when we launched our REITs, we had only 11 schemes invested. Today we are approaching 30. Why are they investing? Because they are overexposed to those government bonds, and something could happen tomorrow.
Even banks in Kenya.
Yes.
Yes.
And those bonds will not always return those returns. They will start coming down when the government takes certain measures.
Yes.
As I told you, in 2006, it was down to 6%. So that is the reason you invest in real estate. Don't tell someone, if you want to compete for yield, and that's where many Kenyans have been conned, especially in real estate.
Yes.
Because you're promised 18%. The people want to con you. Acorn will never do that. And VUKA, I never want VUKA to try and do that again.
Yes.
That you're trying to lure people, promising them, extremely high returns.
Yes.
What real estate does for you, like what we have in the student housing, and the I-REIT and VUKA, products like this, what it gives you is, it gives you a cash return, and then the more important thing it gives you is what we call a store of value.
Okay.
Where you put capital, but that keeps appreciating about 5% per year. But if you did that number and you said, I get a yield of even 5, cash, that's the dividend you're talking about,
Yes.
and I get 5% on my appreciation. If you take, just to show you the power of compounding, if you had invested 1 million shillings in 1923 at a 10% return, do you know how much it would be today? That's 100 years. There's a reason I've chosen 1923. It would be 13 billion. That is what you're investing in. It's
Yes.
long-term.
Long
And then
term.
the other thing, I tell people, don't do it short-term. It's not a short. If you have money and you need it in a year's time, please put it somewhere else.
Yeah, don't put it in.
Kindly.
Yes.
Or 3 years. If you're not looking, this is for your money. And I think looking at Wealth Tribe, it's mostly young people.
It is, yes.
I wish there was something like this when I was 25, because you can invest small pieces, which is normally the barrier. Real estate, the big barrier is the quantum you need to put down to get in.
Yes.
Even if you're buying a plot in Syokimau, it's still going to cost you $500,000, $1 million. Most people don't have that kind of capital.
Yes.
And even if you do, it's kind of risky to put it in one place, one asset, one location, everything. It's concentration risk.
Yes.
Again, I'm sure you guys talk about that in investment.
We do.
So what this gives you is a way in without needing $500,000.
Yes, access.
Yeah, but not to chase returns. Please tell your guys.
Yes.
Kindly.
They're hearing you.
Yeah,
yes.
And that's why I'm speaking to you about it.
Yes.
Because that's how real estate Ponzi schemes in Kenya work.
Yeah.
They tell you we're going to give you 1580. You can't get in real estate, by the way, even 30%. But that's on the I-REIT side, the development side. But the development side carries risks that you should not pass to retail investors.
Yes.
And that's why even when we worked with the CMA, we said only the I-REIT will give exposure into this, because it gives you slow but sure returns. If you look at bonds, for example, they oscillate. Real estate, if you have the underlying assets, there is a high demand. It won't behave that way. It is fairly steady, predictable, and then it's a store of value. It's that money you want to store for the long term. And there's a reason this product is called VUKA. The reason is Kenyans have tied $120 billion in idle land. Idle land, not real estate.
Yeah, idle land.
Idle land, plots.
Yes.
I don't know a single Kenyan I've not met who's over 30 who doesn't have a plot. Because that's what people do.
Yes.
Why do they go to plots? They go to plots to store value, because they are saying, let me put this, I can sell it when I need it. And I'll sell it for more than I bought it.
Yes.
Of course, that's no longer true. But for many years, that's how it behaved.
Yes.
And so many people bought land. And $120 billion is Kenya's entire GDP. Stored in land. This land is not earning you a penny. Your plot in Syokimau that you bought for 250,000 is not earning you money, number one.
That's true.
Number two, you go and find there are 3 titles.
Yes.
Then you start a legal fight to recover land you paid 250,000 for.
Yeah.
Number 3, then because of that problem, you have to put security. So there are costs associated to holding idle land. Most people don't see it. So that is one set of people. The other set of people, they go and buy a flat in Kileleshwa or in South B, somewhere.
Yes.
You buy that apartment, 3-bedroom apartment, for 12 million shillings or 10 million shillings. Sometimes you even borrow.
Yes.
Or sometimes you use your SACCO, whatever it is,
yes.
You buy it. Then the first 6 months, there is no tenant.
That's true.
You're looking for a tenant.
Yes.
Then you find a tenant, but you find him through an agent.
Yes.
You pay the agent 1 month's rent. Okay, then the tenant moves in. Then there is maintenance costs and all of this. And then today there is an even bigger problem, because the government is starting to tax real estate severely.
Yes.
So when you add the costs of going either to idle land or to that plot, apartment, you cannot compare. VUKA is a better product.
That's true.
You can buy small pieces.
Yes.
It has its own advantage. Of course, you can still say idle land, I'll still build one day there.
Yes.
Yeah, for sure.
For sure.
But the day you need to pay a hospital bill or you have an emergency, it's kind of difficult to liquidate those things.
Yes.
And it's a big chunk. You have to liquidate the whole 8th acre or the whole apartment. You can't sell a bedroom and say, now it's worth 10 million, but I just need 1 million.
1 million.
Let me sell 1 bedroom.
Yes.
It's not fungible.
Yes.
But that's why we called VUKA that name, because it was crossover from direct property ownership with all the issues it has to something that's regulated. You will get a regular income. It will not compete with T-bills. And please, if you're chasing just pure yield,
yes,
it's not the right thing for you.
Yes.
But if you want to grow your wealth over a long time, and that's why you see them wealthy, they have like at least 30% of the investment in some form of real estate. But then they're able to access other, like even the I-REIT, D-REIT directly, because they can write 5 million check, 20, yes. But the average Kenyan cannot do that. So we created this product, went to the CMA, they liked it, said, let's test it. See how it works, how it's going to work in the sandbox. And we were very successful. In the sandbox, we onboarded over 2,500 retail investors. We showed that the platform works, the trades work, the system works. Those were the things we were testing. And now, suddenly, for the first time in Kenya's history, a guy with 5,000 bob can access a real estate return without taking those risks that I was talking about earlier.
Yes.
That is why it was called VUKA. It meant crossover. Shift from this direct with all its issues. And what we would like to do, a portion of that 120 billion, Kenyans need to liquidate these things and get into financial assets. One of the reasons, why Africa is not growing as fast as we are, we don't create enough financial assets. The rest of the world, if you go to London today, or you go to New York, or you go to Geneva, you're not going to find people owning plots. What you're going to find is they own mutual funds.
Yes, that's true.
They own, and VUKA is just a mutual fund for real estate.
Yes.
They take life insurance. They do this. They are in financial assets. We need to move away. Africa, we hold a lot of physical assets, and they are worth a lot. The Maasai own cows. They're still holding them. This drought of 3 years has decimated their physical assets are illiquid.
Yes.
They are very high risk, and they are not fungible. You cannot split it. You can't sell just the head of the cow.
Yes.
And say I need it. So that's what I'm trying to educate the markets around. Why capital markets? Because it is the place you find financial assets. I would encourage your people to continue investing in money market funds. It's a financial asset.
It is, yes.
And it's a good financial asset. And I'm not competing. I'm not saying do this or this. I'm saying do this and this.
I love that, because of course a lot of these questions are headed that direction of asking you, why should I give you my 5,000 shillings as opposed to putting it in a circle? Why should I give you my 5,000 shillings as opposed to a money market fund, and then shillings as opposed to treasury bonds? I love that you said that you should do both. You should have a diversified portfolio.
You have look at wealthy people.
Yes,
they diversify.
Yes,
they have those bonds. They have real estate. They are all over, because it's too risky to put your bet. And there's another point I will make.
Yes.
Where we have structured VUKA, generally, if you're not going to invest up to 50,000 a year, then the pricing doesn't make sense. Don't do it. Take your money, store it, maybe put it in a deposit account in the bank till it gets to 50,000 or till you're sure. That's why silver starts at around that level. We say, at least if you're able to do 5,000 a month, you will get there. But if you invest just 1,000 shillings, even your joining fees 1,000 shillings, how are you going to make money out of it? And that's why I say I am passionate about not. So we need Kenya needs financial assets. Yes. And Kenyans need to invest in financial rather than physical assets. But they need to be sold the right one for your right pot, because you need to have all of them.
Yes.
Even a life insurance, it's a financial asset for those with dependents.
Yes.
If
not
you're
for
alone,
everyone, yes.
You have no kids, nobody, you're not taking care of your old mom. Why are you taking
life insurance?
Yes. So it's about, let's educate the market correctly. So even VUKA, first, if you're now, maybe in your late 60s, so as you grow older, when you get into retirement stage, you move a lot of your financial into highly liquid, because now at that age,
you need
but when you're younger,
cash flow, yes,
is when you can build your store of value. So the younger you start, the better. And then you need to be able to start small. Now, for a long time, a lot of financial assets don't allow you to start small, like real estate.
Yes.
So that's why we came up with something that allows people to do that.
Yes.
But don't do it to chase. In fact, once if someone tells you that they're giving you a real estate yield like 10%, just run as far as you can.
They're lying.
It is not likely. Not in Kenya. It's not possible.
Two of my highlights from what you've said is, number one, because I deal with clients on a daily basis, so I deal with Kenyan investors on a daily basis, and their first attraction to an investment is the return. That's the first thing that they approach. Yes. And I like that you've given us a lot of knowledge in terms of that is not the first approach you should use. That's not the first judge point you should use when you're choosing an investment opportunity. The second thing to quote you is, if you're not putting up to 50,000 shillings per year into VUKA, then it's not a product for you. Don't do it.
No,
because the math
the charge,
yes,
the joining fee, then what the dividend will give. You want to be above that kind of threshold.
Yes.
You of course you can. We allow you to put even 1,000, even 2,000.
Yeah,
but it's you're probably using your money badly.
Yes, yeah. I really like that, because actually that specific statement clears a lot of the air in terms of all the questions that I have to ask you. So that's really good. So moving on, let's talk about what is the link between Kwetu, because you have different brand names and people would like to understand what are all these things and what is the link. So what is the link between Kwetu, Palma, the Acorn I-REIT and the Acorn I-REIT? What are all these things and how do they form one picture?
Okay, so let's start at the bottom of the pile, then work our way up.
Yes.
So Kwetu and Kejani are two student housing brands we've created.
Yes.
One, Kwetu, the rent start around 14,000, all the way to 30,000, 32,000.
Yes.
And that was the first one we created. And we've got quite a number of, a couple of thousand Kwetu beds around the city. And that serves a specific segment. If you look at, for example, students in public universities, about 30% of them can afford Kwetu. The other 70 cannot afford. Just because of what people earn, their parents are earning or whatever it is, where they are socioeconomically. So, and however, that's if you go to private universities like Strathmore, more than 60% of the students could afford Kwetu, just because of where they come from.
Yes.
So we said we're also leaving out another big group here. So let's create a product that they can afford. So we created Kejani. It's still student housing, still rental housing, and it's much cheaper. You can start at about 10,000 shillings
per month. Yes.
And that difference between 13 and 10, it's big for many people. And what also people don't realize, which is another thing, again, a misunderstanding in the market, is that when we say 10,000 or we say 20,000, that's not just your rent. It includes all the services and amenities we provide. Free Wi-Fi, free gym, power paid, water is paid, security is paid. A lot of places you go and rent, then you're told service charge, this
deposit,
Wi-Fi, you go and buy bundles.
Yes.
So it is actually, when you look at our package, only about 60% is rent.
Yes.
The rest is everything else we are providing. And a lot of parents have realized
security.
It's much better because you pay one bill. They are not buying bundles. You're not buying, you're secure. Water is running for 24/7. So it's a bundle offering.
Yes.
It's a bouquet rather than rent. Now, most Kenyans just think rent. We don't look at it that way. We thought that we should solve the problem holistically for students, so that we give them a place. Once they come and pay that one figure, they have all this, they can enjoy all this, because it's even more convenient, it's cheaper, it works out cheaper. Then we build next to the universities. Most of them don't have any transport cost.
Yes.
And where we have a building that's a bit far, we provide free transport.
Yes.
Again, it's inside the price. So
you're not just providing convenience for students, you're also providing convenience for parents.
Precisely. They pay one bill.
They pay one bill.
Yes.
Because as someone who went to uni recently, having to hustle with your dad for rent, and then tomorrow you're asking for Wi-Fi, then tomorrow...
Yes, bundles have
run out, yes.
In fact, what we found, a lot of students would miss meals to buy bundles.
That is true.
Now, is that a healthy way to operate?
No.
Because you've run out of bundles, and you said, the lunch money, pocket money, I'm going to buy bundles.
Based on what you're saying, actually, I see that you're also solving an education problem.
Yeah, completely.
Yes.
Because now you can focus on
your studies.
Yes. And we have study rooms in there. Again, it's free. So all the place, once you pay that, you get all of this. So that's the underlying assets.
Yes.
Now, because you want to link that to real estate,
yes.
One of the things, if you're ever investing in VUKA, I-REIT, even not just Acorn, any other, you have to look at what is are those assets in high demand? Because if today you create a REIT that does, say, 4-bedroom houses, it will not earn as well as we would, because the demand isn't high and it's not resilient. Now, with 1 million young people turning 18 over the next 10 years, those assets are going to generate a return.
Yes.
And we don't rely on one tenant. If we have a building, it has 600 people. Hata mtu moja akitoka, we are still at 99.9% occupancy.
Yes.
But again, going back to buying that flat, when the guy moves out, you're at 0%.
You're at 0%.
So these are some of the advantages.
It destabilizes your income.
Yeah. So then these assets, we develop them in the D-REIT. From when we buy the land, we construct till they are full. Once they are full and stable with occupancy, now it's called a de-risked asset. You've removed a lot of risk, construction risk, market risk, financing risk, all this risk. That is when it is bought by the I-REIT. So the I-REIT just holds income generating stabilized assets. Again, very, they've already established themselves, track record, the building is full. Then those rents that they are paying, every 6 months, we pay them out as a dividend.
Yes.
That dividend today is around 4-5%. It has been for the last 2 years.
Yes.
And it will, if you ask me, as the portfolio grows, it will get to around 7. That's in another couple of years.
Okay.
Maybe 2-3 years, I don't know it, but because it depends on many factors.
Yes.
But it will be that, getting to 7% will be when it has now fully, and that's why we also tell people, don't come for the short term, because you will not enjoy the full benefits of it. If you're doing 2 years, it's not, do something else.
Yes.
Go buy,
put your money elsewhere.
Unit trust, money market. But if you are growing your wealth you want to grow your wealth over the next 5, 10, 15, 20 years, then VUKA is a fantastic investment for you.
Yes.
Then you get that yield, and then every year we adjust the rents. When we adjust the rents, every six months we do a valuation.
Yes, because that was another question.
And it moves your price up to how the rents have moved.
Yes.
So you can expect that bit, which we call capital appreciation, again, to be in the range of 5 to 6% a year, because that's how the rents move. So in the first year, the income REIT delivered a total return of cash and appreciation of about 9.4.
Yes.
In the second year, it's 8.3. And that's the range. Now, it will never be static. It will range there. But as the portfolio grows, we get what is called economies of scale.
Yes.
And you will see that starting to push up as we go along.
Okay.
Yeah.
Thank you for the historical explanation. Now we understand the genesis. So now where does VUKA come in? Now we understand what Kwetu is, what Kejani is. So where does VUKA come in?
Gotten what the REITs. So these properties,
yes,
are held either if they are being developed under the development REIT, if they are
stable under the I-REIT
income REIT. So I've differentiated the two REITs
very clearly.
So now, in the income REIT is where VUKA sits as a retail. Now, if you have 5 million plus, you don't have to come through VUKA. You can come and buy directly your units.
And where is this directly?
At a broker, a stock broker, on the what is called the unquoted securities platform of the NSE. That's where you go. Most of the people come even to us, and we work with brokers in this market to organize for them to buy. But most people, retail investors, don't fall in that segment. The bulk majority fall in where you'd really maybe have 20,000 you want to invest per month, 10,000, 5,000, or you've gotten your bonus, you get 100,000, 200. So that's where VUKA comes in. It is your way to access the same return that we are giving pension funds, high net worth individuals. Now you have the same access to that return, which you would not have another way to access.
Okay. And from the Wealth Tribe, a lot of people are familiar with Kwetu, mostly because it's been existing for a while, and so they've seen the buildings as they're moving around Nairobi. Do you have any Kejanis that are operational?
We just opened the first one. It's just after Easter. It's in Karen, next to Catholic University. We have another one we are opening later this year in near Chiromo campus on Riverside Drive. And then we have a number that are coming up in the next couple of years. So actually, in the next 5 years, there'll be more Kejani beds than Kwetu. Yeah, because that market is bigger. It's just that you have to start somewhere. So we started with Kwetu. Yeah.
Now we understand what is the Acorn I-REIT, what is the Acorn I-REIT, what is Kejani, what is Kwetu, what is VUKA. Now let's get into the structure. What is the structure of the Acorn I-REIT?
Structure, what do you mean?
For example, when we talk about money market funds, now that money market fund is a very common product in Kenya, so we know that a money market fund has a trustee, has an auditor.
Right, I get what you mean. Yes.
What is the structure?
So the structure of a REIT is not so different than a structure of a unit trust. Because all these are forms of mutual funds. So even in the Acorn case, all the Acorn student accommodation income REIT, the assets are held by a trustee. And in this case, the trustee is Cooperative Bank. Generally, trustees will be banks because they're the ones holding the assets. Even if tomorrow Acorn is not there, the assets are held by the trustee on behalf of all investors equally. The investors rank equally.
That's nice to know.
Whether you're through VUKA, you came directly, you rank equally in the REIT. And of course, then there is a manager, REIT manager. Now that is Acorn Investment Management Limited, because you need someone with real estate and investment experience to manage the REIT on behalf again of the investors. So that is Acorn Investment Management Limited. Then we have an auditor we have a valuer. So the auditor produces the annual accounts, and in the case of the Acorn Income REIT, it is Deloitte. And then we have a valuer, an independent valuer, who has to value those assets annually by law. And even the law and the regulations for it provide how he can value. He can't just do it anyhow to avoid manipulation. So in that case, the current valuers as Knight Frank. So they do their work independent of Acorn. And they have to file, they owe their fiduciary duty to the investors. So those are and that structure has been put there by the CMA to protect investors in these regulated products. That's why Acorn, we are very big with regulated products. We do not do anything within the unregulated space.
Okay.
Because the risks there's no oversight. It's a wild west.
Yes.
But Kenyans are duped there by high returns. Return is and that's why they go, because you're chasing return. As I said, very high risk strategy to chase returns. The best high risk, high return, the best high return product, not high risk, high return product, is you go and buy treasuries. But as I said, it has issues. Yeah.
Okay. Now, what makes then, I know you've touched a bit on this, just in case there's anything extra. What makes VUKA a unique product in the market? And you can combine it with VUKA and the Acorn I-REIT. Why is it a unique product in the market?
Oh, that's a simple question.
Yes.
It's the only way it's the only product offering retail in VUKA now. A way to invest in regulated real estate.
That's true.
That there's no other the way to invest for retail investors. Of course, there's also Fahari I-REIT.
Yeah.
It offers retail investors, because that one is listed in the main market.
Yes.
We are on the USP.
Yes.
And there is a reason why we are on the USP,
Please
not the main
that.
market.
Please
Yeah.
explain.
So we are on the USP because if you go to the listed side, you're vulnerable to market conditions that are outside the performance of the asset.
That's true.
And that is what has partly also affected Fahari. And therefore, if the REIT starts trading below net asset value, you cannot bring new assets into the REIT. But on the USP, the units trade at net asset value. There is no this volatility that is created in the main market.
Yes.
And generally, REITs, anywhere in the world, even the most developed markets like the US, they take many years before they go to list, because you need to build a large scale, then you need to build a very strong dividend track record, and then you need to know that you're mature now. You're not adding so many assets, so you can always wait out market fluctuations before. Otherwise, the moment you start either trading, if you start trading at a premium, it means the new guys are paying a premium to come in. If it starts trading at a discount, means you're diluting the old guys.
Yes.
At NAV, everybody is dealt with at par.
Yeah.
That's why we are there.
So that's a good thing, because one of the other questions I was asked to ask you is, are you ever going to list on the main market?
I can't say yes or no, because as I said, there are prerequisites.
Yes.
And including market conditions.
Yes.
Which will determine whether we do that. But the way we have now structured things like VUKA, there's no benefit necessarily, because you can still trade your units even now. So that's the main reason to be listed, is mostly liquidity. So because there is liquidity mechanisms, for now, at least for the foreseeable future, we'll trade on the USP.
Okay. Yeah. A follow-up question is, as you onboard more properties into the I-REIT, investors fear that you will increase the number of units issued as well, meaning that what we own could be diluted down the road. Is this a possibility, or is this an unfounded fear?